The point here is this, that this is the bear market low. The first initial decline that we had was 9.2%. How many weeks it took for this for the price to make a rebound, like basically to go right back to the highs? It took 9 weeks. Okay, this is the high right there. So it took 9 weeks to this candle right there. This one right there took 6 weeks from this low to this high. What we're trying to do is we're looking at this high right there. This is where the initial, this is the top right there, right? This is the low. So this one took 6 weeks. Now we'll come back to the third one. It took 6 weeks as well. So now what we're trying to do is we're looking at this high. Now we're going to count the number of weeks, that how many weeks is going to take to go right back to 6147. Now we're going to take the time that the previous two times was 6. Is this one is going to take 9? That's what we're going to find out. Okay. This is what you call bar to bar relationship with time and price. This is why the GAN is so good. Elliott doesn't give you this much of a side by side price and time comparison, but Swing does. They're very good if you fully understand exactly what I'm trying to tell you or what I'm showing you. It has a very good price and time relationship when it comes to the swing counts.
Mo, can you show 2021 to 2022?
We can, I mean,
Because, I know that, you are bullish, but then just to see what happened back in 2022, because
the COVID low. Oh, that's a COVID low. How far you want to go back? This is a COVID low right there. So we have, let's
2022 bear market, because, first leg down, we had a minus 14.6 and then we went up and then, we went down again. So
I mean, if you,
I'm just, doing the reality check, is, are we really, really, yeah, yeah, we can expect a, bounce from here one way or another. But after the bounce, are we going to just, keep a
sell
bull?
back down to come, well,
Are we going to be in like a 2022 style bear market? We don't know
boys,
yet.
that's a tough one to make. That's a tough case, call to make. Are we entering a bear market? That's the whole different debate. Well, nobody knows that. I mean, looking at here, this was 14.6, 12.7, 17.8 to 9.6. I mean, this is lower highs and lower lows. I mean, this entire decline that we had was this 27%. Because to me, this is what I think, that this quarter will close in red. The reason why I'm saying this is because we haven't had a negative quarter for a very, very long time. So we're due for one. And I think we're this is going to be the one of them. We're only 2 more weeks left, anyways. So if we go back here, here's the quarter. So if we go back here, Q1 2025, we're down 3.97, 6.4 for semis, Q6, transports 4, small caps 8, Dow's like 2.38. It's just 2 more weeks to go. So I don't know. I mean, which one can you? Well, the thing we're not looking for 8% upside the next 2 weeks anyway. So we all know that, right? So this rat right there is gonna close negative for the first quarter. That's pretty much confirmed. Transports basically is gonna be down anyway. So this is one of another economy indicator right there. I mean, are we looking for a 6% upside in the next 2 weeks? I don't know. Same thing with semis. We're just running out of time. And then can we just break even or whatever? That's gonna be it. But the thing is like is such a one-sided sell-off that we just had. Look at this. Here's your tech, and here's a consumer discretionary, right? Look at all the other sectors, what they're doing compared to this one. We're really into a bear market, or we're just like if the market has really taken a hit across the board, all of these sectors would be down. It's just a two-sided kind of, it's a very controlled selling that we just had for this 4 weeks. More like a one, all these big names are the ones that just kind of like taking a breather one by one. They all came back down to retest the 200 EMA one by one. Look at the weekly rotation. Look where everything is going. This is not bearish. Yeah, but when we look at this, this is exactly what we're seeing. Look, everything else is going compared to these two. These are the only two ones are rotating out. But everything else is going. Look, everything is heading toward northeast. This is weak. Keep that thing in mind. This is the week that we just had. This is the previous. There's one before and one before. This is 4 bars. There is no such thing as is turning down like this, as you can see on the screen. This is a real rotation right there. Communication right there. See, it was showing strength. It's just turning around, turning back up. So does the financials now. This dip was this we have to buy the weakness. I'm telling. It's just it just the downside is that to get killed on the IV, on the implied volatility on these options. If this everything would be turning this way, like meaning that everything is like this, yeah, you can make a debate like, okay, yes, all of these sectors, they're rotating out. They're no, like they already run their course. And look where everything is going right now. I've spent so much time because this is what I do. Like I'm just looking at everything across the board. It's just like, okay, I understand the market has selling, right? Their stocks are taking a beating, this and that, but what is the rest of the market? Like, where is the actual weakness and where is the actual strength? We can see it here. So, what do you think? What is going to happen in the next couple weeks? This rotation hasn't even made it to a leading quadrant yet. It will. Yeah, when we go to a daily time frame, that's different. The daily time frame here, you have financials are rotating. Now look at this XLK. This one right there got rejection right there. The damage, this XLY, the top two holdings are Amazon and Tesla. Okay. And then you have all of these other stocks, they are in XLY. I can take you here to this. Where's my here? These are all the stocks in XLY. All of them right there. I gotta load up all the data. So we have, oops, 61 stocks. So the top ones are Tesla and Amazon. So because it has so much weight on the sector, which which one is leading year to date? Yum Brands up 15%. LKQ 13, O'Reilly 11, AutoZone 11, Tapestry was 7, Starbucks, Hasbro, eBay, Genuine Parts, Dollar General, Garment, McDonald's, Domino's, and Wynn Resort. And the list ends here. So we have what? 3, 6, 9, 10, 11, 12, 13, 15 stocks, roughly. So 15 stocks are up. The rest of them are all down. So which was the biggest loser? PVH and Tesla. Tesla the second one. When Tesla is the one is gonna take a hit, is gonna drag the entire sector down with it. None of the so this is where you're gonna see the rest of the stocks and get under pressure because they don't have enough weight, okay, to lift the sector up. These two right there is your Amazon, and here's a Tesla. Yeah, it has Costco, it has booking.com. This, so they're there. They're still considered in the top 10. But these two right there are the leaders. And this is the worst sector right now, XLY, out of 11 of them, which took the most beating right there because of Amazon and Tesla. See how everything is how it's all correlated because now we're sitting and fighting. I'm gonna go back to XLY. Some of these stocks, let's say Expedia, some of these. they just they could get an upside, but they're just not gonna rally that much because your overall sector is taking a beating because they don't have enough weight. GM is a good buy as well. I was looking at this one yesterday. It's in the second swing. Gonna change this too. Doesn't have it's a very low ATR play though, so you don't have that much alpha. Ralph Lauren right there is see everything is pretty much down to this 200 EMA. You see right there the red line. All of these stocks they come in they just retraced all the way back down. Here's Amazon at your 200 EMA right there. See like it has to cross this. I know it's going to be a strong resistance for the stock now, but it'll find its way up. But it has to close above the 200 because when you break 200, you're gonna come right back here, hit the wall, and you're just gonna back off. You know, because this is a very strong moving average. You know what I mean? You don't like if you break. I mean, you see like Amazon um, broke below the 200 here. So then the next day, it spent and made another low, and then you see like it's trying to bounce. Then another day came, you see, it rejected right there, the 200 EM. It's always like it becomes a very strong resistance if you spend a day or two to the downside. These bigger names, because Amazon is not a small company, we all know that, they're always going to try to bounce back toward this 200 EMA. And when you're going to come back to this 200, that's going to get another rejection. You see, then the next day, another rejection. And yesterday, it ended the day with the inside day. It's Amazon right there. But this is the hurdle now that it has to cross above and close above that number, the moving average. It will, but the point is when and how long is it going to take. This is where then we're trying to fight the upside, and now this thing is sitting on our head. That's when the time is running out. There's no I'm not like buying Amazon here. It doesn't, I mean, I'm pretty sure that Amazon will make a move back up toward the third swing anyway because it's going to be deal. But it has to clear this path first in order to get toward the third because of the 200 sitting on our, sitting on our head. So how much time do you think we could buy? 2 months, 3 months, 4 months? How far we can go out on time? That's that's the trade. You really want to buy 2 weeks worth of calls and then you could just literally reject after 2 points, or we just don't even do anything, wait for the price to break above the 200 and close above the 200, or you can see if the swing can turn back up, then it can continue because now the swing is down. That's the problem. Swing once the swing, see, the thing is this: when the swing is down, okay, the swing it because is when the price is making lower lows. Well, how much is going to be down? We don't know that. Nobody knows these retracements, where the bleeding will stop. Yes, we can run our fibs and then we can just draw those levels, see where we can find support. Or this support is going to hold. It can hold it for what day or two. Then the next day it can take it out as well. It just like you see right there, this is the low. So from 190, it bounced right back up to 201. That's 11 points right there. 11-point move. That's a pretty good move for 2 days, right? Look what happened the next day. Washed out the entire 2 days of the rally in one single day. This is tough. You making up 11 points in 2 days and just giving everything back in one single day. What Amazon is doing that horrible? It's just the way the market is trading right now. You have a Nasdaq that is down 600-700 points. Which none of these Mag 7 is gonna go anywhere. I mean, we all know that they're all gonna take a hit. I'm looking at few names, but at the same time, I'm looking at this. It's like we have to wait. Look at everything where everything is going. Horrible. Is your Ralph Lauren, Expedia, Starbucks? Look at everything. This is the most terrible looking sector right now. Is the XLY, and I'm gonna I'm watching bunch of these names and see if we can try to I'm gonna play a few of these names for sure. But they just none of them are doesn't become it just doesn't look good for now. I mean, they'll improve. I mean, the only ones that look Amazon starting to show some signs, and Tesla is here. You see my point? Like these two that I just said before, this and this has to turn the sector up because these are the two has the most weight. Those other names not gonna do much. They're the ones who put a damage. They're the ones who's gonna turn around much faster than the other companies because they're the top leaders. Always watch these weights. Always, I tell you all the time. Would you buy the bigger name weakness, or would you buy this random different stocks? I'll go with the leader, the high beta stocks, because they're the one always going to recover much faster than the other ones. You see, like all the other ones are going this way. These are the ones that already run the course and they're trying to recover. So this was the this was brutal. I mean, the beating that Amazon took, that's like what, 8, 9 days. This this is crazy right there. 3, 6, 7, 9, 10, 11, 12, 12 straight days. This just from here to here. 12 straight days of lower lows. You can see right there. Not a single green bar. Then there comes a green bar, and they got a full reversal the next day. Then we got one, two, three, four. That's four here, and then three here. And now it's just bleeding. It's about to coming, pretty much coming to an end. But it has to pass this 200. So now going back to the this screen that we look at every single day, The only stock has a swing up is Nvidia. All the other swings are down. This is the one that actually paid us yesterday. Yesterday? Yeah, the other day. Whatever. I think yesterday, I think we closed it or whatever. We had a trade on Nvidia, remember? So looking at these, we have what do we see here? We have Mags, the ETF down 12.40%. Tesla 38, which is fine. Apple 14.75. Google 12.58. Nvidia 9.4. Amazon 9.7. Microsoft 7.8. So we have Netflix and we have Meta that is 3 and 4. So what is looking good in the coming days? We have Apple, which is far back here. Microsoft, which just, I hope it moves more. Microsoft is 422. If we can get here, that would be the ideal. I'm always, I always have my eyes on the midpoint. This is when a stock, because stocks is always trading between 52 weeks high and between, your bracket is between the 52 weeks high and a 52 weeks low, right? So the mid is this. And whatever stock even makes a move much higher, whatever the mean reversion, okay, when it comes to a play, is this where the price most of the time will come right back toward the mean reversion, which is the midpoint, which we call as what? A point of control. So I'm always watching these midpoint. I mean, how long is it going to take? Well, I don't know that. But this is the number that I always try. And if when I look at these strike prices on the option chain, most of them are always are sitting right around like a 30 to 35 delta strike prices. These midpoints of the current price when you looking at these midpoints, they're right around like 30 35 delta. So the 35 delta is I really like it because I think the 30, which is your 35% probability on a strike that you're willing to bet on to think that the strike will go in the money. So I think 35% probability is very good compared to a 50% at the money strike and 40, which is, slightly a little bit below. That's different, right? So you definitely paying more premium and to see like if the if the stock the price can move, I could I can get a bigger reward because I have a little bit more because I paid more and I have a little bit more delta. So, well, I mean, it's a good question. I mean, there are few trades that we should have cut them, but the the drawdown on the some of the trades are just 8, 9, 10 straight days of beating is something that happens like once in a while. Is this not something that you're actually like you see like a stock that is that is down for like straight 9 straight days in a row. Nobody can predict that, you know. I mean, I'm pretty sure that if we start going back and when we look at a chart, we don't look at it like when was the actual like a stock has been making lower lows for 9, 10 straight days in a row, you know? So at the same time, I mean, volatility spikes and there's some certain stocks are just already starting to take the move lower than the rest of the action started later. You know, not all of these stocks are the actually started with a sell-off. So because if you compare Amazon here, I mean, if you can put the Qs on top of it, let me show you. You see the Amazon right there was was this is the 11, 12 straight days of that beating right there. Look how long Qs took to come back down. So then when Qs rolled over, the overall tech, then Amazon keep going, that's the pressure comes right there. So now they're side by side. Yeah, I mean, yeah, there's few trades, yes. I mean, but again, I mean, loss is a loss. We gotta have to accept it. It's just a part of the game. I mean, but that doesn't mean the next 10 trades is gonna be a loss as well. So things will turn around. I'm not, I don't stress over that. So if, I mean, we can talk about certain, see, the only thing is this is the, what hurts the most premiums is the volatility. The spike in volatility is the one. Look at SPY. Okay. We had a trade open on a SPY. We took a leg lower. So it was down like almost 7, 8 points. I had 10 contracts. I was down like 300 something. Yesterday, it has to rally 10 points plus just to break even. Think about it. How much of this volatility impacts these premiums? So you're down 7 points, but to make up the difference, you have to come up 10 points just to break even. Even the fact that you have over 2 months time in your hand. Now you have to look like how big of a move the SPY has to make for you to reward to actually pay you. I've had 10 contract that cost me still like $2,400. Well, I was like yesterday, I was like, just yeah, I mean, if you have a trade open and then if you got a big if you got a big pop right there right from the start, yeah, the 10 points is a much nicer payout. Is at the same time is because the volatility is coming down and then you just taking a full advantage moving up. Because now your in calls, you got hurt with a spike of volatility and then the price recovers. You see, like that's how you have to make up the difference. You always gotta have to move a much higher what you come back down is just to break even. That's crazy. That's why I was like, you know what, just close that trade. Make like $100. I said, that's fine. I'm okay with that. I'll I'll make a new one next week. I'll adjust it as I'll adjust it with the different strike prices. It's just, yeah, spike in volatility, Ivy definitely hurts a lot, especially these premiums. Spreads can definitely help you a bit because you have your short calls against the long calls, but a single call plays, those are the ones that they are the ones gonna get toast the most, you know? A single call and a spike in Vega, that's what you have. Vega is your implied volatility. Yeah, spike in Vega call's gonna get toast. No, that's for sure. There's no way out. So we'll see if see I'm with the L like this is the one that I I watch and track from a day-to-day basis. So this is the all-time high. This is the low. So this is the entire decline we just had. So we can come back here and talk about it like, okay, so this whatever 10% drawdown we just had, what how we can label this thing. I mean, to me, it looks like a three-way move because if you can't, I don't know if who can count this as a five-way move because I can't. If you wanted to show me, I mean, I would be happy to take a look at them. I mean, you have initial decline here. So if you do make a case here of a 1, 2, and then you make this as a 1, that still doesn't work because your smaller 1 is a much bigger in a magnitude and length compared to your one higher degree one. That's not going to work. You can, I thought about like, okay, we might be doing 1, 2, 1, 2, because we can count this as a 5. You can do this as a 2, and then you can count this as a 5. But this one right there doesn't fit. It's just not going to work. You have a smaller degree one is bigger than your higher degree one. Now, how far are you gonna go? I can give you the answer right now that the wave count will never going to work. Now, if we just simply take a two measured moves, yeah, I mean that's why I had this as an A, as a B, as a C. So you got a three here, three here, five down in A, B, and C, and then just an extended C. So you got one, two, down in three, up in four, and that's the diagonal. That's the pop that we just got yesterday. So exactly what I was looking for. I was hoping for to go from here because I was like, this is the low we just made. I was like, okay, this is looking good. Remember, I had this a day before, which was on Thursday, I believe. They're like, okay, I mean, we might just go this like this, but then we end up coming back down again. Made another low. I was like, okay, fine. Now I gotta put four here and I gotta move this. So like, okay, that will be the last push because if we have five here, it's gonna well, every time you have five, you're gonna be due for a three-way bounce no matter what. So where we at now? We have two gaps. that needs to get filled. One here and one here. Okay. If we take a measured move of an equal distance, which is the distance traveled here on the first move on the first swing projected from here, the 100% relationship was 5684, which was here. We got a big nice pop right from the 100% relationship, and then we just spend several more days coming back down, which is fine. So this is all we have. Now you cannot make a diagonal either because there's no overlaps here either. Okay, so this is the best it's gonna get. Well, yeah, healthcare. Some of these healthcare stocks are are where's that be? I think I had a. We will look at them. This thing is not showing. Healthcare stock. The which one not leading? CVS. Damn. Wow. What they're doing? Um, MOH backs. Let's do a flat. Vortex, GILD, Amgen, AbbVie. So Amgen and AbbVie are pretty much the same. MDT 16, J&J 12. What's Amgen is doing? Inside here. Oh, that's the second swing. Oh boy. So you got a daily and weekly both in a second swing. Amgen 3, 6, 7, 8, 9. This is 9, 10. This is like what? 1, 3, 6, 7, 8. That's like 10 straight days to the upside. 10 weeks. These are weekly bars to the upside. That's a 52 weeks high right there at 346. Every Abby went up to the third swing. Abby is good. Abby is definitely looking good. That's the year. That's a yearly higher bar for the year as well. At 206 is going to be, yeah, it's the same thing. 3, 6, 4, 5, 6, 6, 7 days. It's up for 7 straight weeks in a row. Very strong. Definitely outperforming the benchmark. MDT right there looks good. Core. Look at this back-to-back years, pretty positive. Up 14. Healthcare is, their few names are definitely J&J is. This is a 52 weeks low and this is a 52 weeks high. So some of these names, healthcare is a defensive play anyways. So market rolls over. you know. Where's healthcare? I had them here. There's a defensive sector right there. So when market rolls over, these are the three defensive plays: utilities and consumer staples and healthcare. That's your growth. Energy, you can put them both ways, so it really doesn't matter. And this is your, I mean, what done is done, right? I mean, I think technology is the way to go right now. But you have to look at this with Mag 7 drive. What is this economy is built on? Tech. Tech is, it's a tech-driven economy. So those are the ones that move the market. Nvidia is a good bet. We closed it. I'll see. About Broadcom yesterday, about shares. So I'm just gonna go in and just let this thing work. Um, real estate, material. Well, some of these names are has has made quite a bit of a room, move to the upside. They're gonna take a bit of a breather. I mean, the only thing that I see here, as you can see, is XOK is the one. Communication, I hope it just makes energy is fine. But energy is not doing, Trump is not gonna, is, he's all about drill and this, and he's not gonna spike the energy prices up. I don't know if energy is a really, um, it's not doing that great. I'm always looking at the XOM, and we can go back here. I have all these, a few names that are like all over the place. So what do we have here? Top one is HES, EPA, FANG, HAL, Oxy, 5. See, they're like so narrow swings. There's like back and forth, like down 13, up 17, down 13, up 14, then down 15. It's just, how can you, this is tough to analyze a price to see like which way the thing you just going up and just pop and fade. Oxy is just very range bound. I mean, he's making lower highs and lower lows. It's in the fifth swing right now. EOG, tell me how you want to trade this. Can you trade this? Look at this nightmare. This is the one I like to trade. Anyway, so here you got a fail swing here and a full. There comes a two. It's gonna have another down swing down in third. It's very range bound. So this is very difficult to trade. Look at this. Go all the way down here, all the way back up. Well, yeah, I mean, if you can nail the reversal, of course, the payout is there, but it just doesn't have the overall price, doesn't have the clear read. So if this thing is just literally like this, I mean, which way you want to trade here, and then you just tough read some of these energy names. I looked at them, few of them, and see, I mean, I'm not saying that you cannot catch this move. You can. But the point is like, are you just trading a swing? That is one thing, but to actually have a trend move, you don't get to see that. You just a back and forth chop. Look at that. It's just all these swings are just they're just turning down. This is a good one. This is actually going. This is starting to look good. That's your higher highs and higher lows. I don't even know CTRA. Some of them just. I mean, this is a weekly time frame. How many weeks or months are you talking about this price? Just there's no clear trend to the upside. I mean, I trade this once whenever I able to. Um, this is the top leader of energy, anyways. Only 4%. That's your 200 EMA right there. 112.42. Rejected here. Now it's trying to make another attempt. Look how many weeks it has been down below this 200 EMA. XOM. Down here. Look at this. Look, we can trade this, we can trade that. I can trade anything. That's not a problem. But the main thing is this. If we don't know where is this, there's you can't just sit and cherry pick and fight these individual stocks and hope like, yeah, they're just gonna go to the moon. So what do we make out of this? Okay, well, we have to look at the bigger picture first. Okay, then you can always fight these wave count and put these labels left and right. Okay, this is everything. The confirmation comes from here, then it gets plotted to a wave count. It's not the other way around. The swings are down. Okay, so in order for to project something to the upside, it really don't. It just doesn't make any sense. Okay, it's just. I mean, I can lay it up on a chart. Yeah, it's gonna look beautiful, but that just it's not. It's only a one side shows that yes, there is a potential upside, but this side is not showing me that. I need this confirmation first. Okay, so you always remember that. Swings are all down. We need 3 weeks of higher highs for the swing to turn back up. So where we have the strong resistance, or you can call it as a wall, that's where the price is gonna has to fight with the close that way you have to watch is for to see where we can potentially turn around. This, you see this green, how the line turns red from this low. So you have to watch 55.75. You're gonna watch 213.97 on this one. This one right there is a 418. I closed this trade yesterday at 416. Okay. It was off by like what 2 pennies or so. I just sometimes it kind of gets me, I'll set up a price alert on a certain level because I was on an hourly chart that I was looking at. and I just leave them, and then the price is gonna come, and it's gonna come really close, almost to the penny. Then it's gonna back off. Then it's gonna try to come close. Then it's gonna back off again. I was like, okay, fine. You want to play around? Let's play. I'll wait. I got a lot of time. I'll wait. And then it finally came. It was like 2 pennies shy of 415 print yesterday. Yeah, where was the close at? 413, 415.30. So it kind of backed off a little bit. Um, I just it's like, you know what, just make something close. So I just closed the trade. Um, this one would be 499.77, which is your 500 mark. So the swings are down. So we need 3 weeks of higher bars for swing to turn back up. We don't have any yet. So we're gonna see what the next week is gonna do. Are we gonna hold the low? Are we gonna have a higher bar for the next week? That's what I'm hoping for. So what we can expect, or what we can think that we can make a case for upside to come into a play. But that doesn't mean that we cannot make another low next week. If we take out this low, we're gonna have another lower bar for the week. So we're yesterday was a very good close, and we did put like a little doji here and these bullish hammer candles here on the weekly time frame. So we have a mean reversion signal here, mean reversion signal here as well. So that can come into a play as well. We're definitely pretty oversold, and we'll see how it goes. But the point, I mean, we're down five. You know, I mean, this is eight. This is three. This is not like this is nothing. And well, we all know about this side. So this is we have this is the levels that you gotta watch next week for sure. Okay, so that doesn't mean if we're gonna have one higher weekly bar, that still doesn't do any good because that is not gonna turn the swing up. We need 3 weeks. So meaning we have next 2 weeks. So you're talking about April of first week. That will gives you 3 weeks of higher highs for swing to turn back up. So yeah, um we have time. 3 weeks is a lot of time. Okay. So weekly swings are down. Go back to a daily time frame from day to day basis. Now I was like sitting like I've been noticing that we all watch bunch of moving averages, right? And we do 9, we use 20. That's what I use on a 15-minute chart, 9 and 20, 9 period and 20 period. What I did here, I put 5 here. So it's a 5 period moving average, right? On a daily time frame. So, and then what I did is like this green one right there, this line right there is your 5 moving average on all 4 of them, as you can see. And then this yellow part right there is where the price closes below the 5. Okay, that's when it start turn because I made like a shading kind of whatever you plotting they call multi-plot shading. So I put a shade here, like, okay, it turn to yellow, and it continues that until it turns green. You see, like, well, I had this thing a little bit highlighted. I was gonna show you. You see right there? So the yellow is where every time when the price closes below the five, okay, and it remains in yellow, and then when the price starting to move above the five moving average, and then the band turns green. Okay. So that's the plotting that basically does that. So now let me show you this one. So what I did on this, I put a shades here, as you can see. This I colored them a little bit because I cannot make them red. I can do a little bit, pop a little bit here. So red and green. What it is, like this. So now what this thing does is what is like actually showing you is this that you have a five moving average, okay? And when the price will close above the five moving average, it turns green. And then every time when the price closes below the five, it remains red. Okay. So you can see it here. So this red, and then the next day, the price closed above the five, then the next day, and then another day, then another day, right? Until here, the close was above the five. So this entire this stays green. Then this sell-off came, turned red. It's just the I think is I mean, I scripted all this. So it changes colors as soon as the price like when it closes the day, you know? Basically is as soon as the price started to move above the five, the shade is turns green. And then it all depends on the close. So yesterday close was 562.81, right? Which is right there. The high was 563.83. So now you see that turns green. So now the tricky part is that we had a green here for one single day as well, and the next day we reverse. You know, we need something like this. You see, like all of these closes are above the. So just the. I mean, I could. So I'm just working on a few things just to kind of like put some shades and stuff. I'm always doing something. So it's the same thing here. So this will tells you that based on a five period, how long for the is the price has been making pretty much lower lows until the price breaks above the five moving average. See, all you can just literally look it up. Even the fact that you do have a bounce here and here, but not the close. The only way the band turns green when you actually have a close above the five, and then the yellow shading right there will turn into a green. So now you can expect like, okay, yes, can you buy something? Yeah, yeah. I mean, things are starting to turn back up. So it's considered as one of a buy signal that prices are starting to move above the five period, moving average. And then consider as a shade is like, okay, if we have another day for price to make another higher high, and then it stays, stays green until then you take another beating or whatever the case is. So as you can see, it's just the best way to kind of like visualize like, okay, well, how I am seeing if it is a downtrend that the market is, if the price is making lower lows, like how long actually based on 5 period, like how many days it has been that the price has been down, right? So then what you are waiting for is to see when did the price manage to move or or break above the 5 period, the 5 moving average. Yeah, okay. I mean, we're gonna talk about this. Just the way. I mean, look, what done is done. Okay, I am. Well, there's we're not the only ones, or I mean, everything will be fine and everything will turn around. Just, I'm not worried about that. Number I was using 50. So that's what the shading part is. I mean, I could throw another moving arrow. It doesn't matter. I think 5 has very I think it's a good way. I mean, we can do 9 here, but it's a daily time frame anyways. So something to I mean, we need we need to hold these lows. That's all it is. And then I could definitely, I mean, I can always project the upside. That's not a problem. We just need to hold lows. Not like this. You see like one day pop and then the next day boom, reversal. So we'll see. So we're gonna watch, and again, swings are all down. Okay, as you can see, they're all false tiles. So when do they turn up? We need 2 more days of higher highs. We need 3 bars. 3 bars of a higher highs for the swing to turn up. So we still gotta wait Monday and Tuesday. That'll be 2 more days. So we have one higher bar. So we need 2 more. Then we can have the swing to turn up. Then we can look for swing to, to have a bit more upside or whatever the case is. On the weekly side, remember, we still gotta go 3 full weeks. So we only have 2 weeks left for this month, and then the quarter ends. Okay, so we'll see how it plays out. Looking at seasonality, the next 2 weeks looks pretty strong. Okay, so that's the positive we can make. Okay, March is down. Technically, March was supposed to be up. In April is the second strongest month of the year after November. Just keep that thing in mind. Okay, so because if we go back here, if we consider now, because we are actually heading toward the next 2 weeks now anyways. So then we take March and then we go April. You see, bit of a slow start here. It picks up. So I would, I mean, my plan is to play the upside, considering like based on this, with finger crossed, we're pretty oversold. See if we can rally a little bit more, and then as soon as we end the month, I'll put a hedge back on the board, you know, just because we have we have some work to do anyways, because the weekly part is still down. It's just a matter of like first gotta have to fight these see if we can get a the swing to turn up after taking all the beating. And once it gets to around here in this zone, I'm gonna just I'll put another hedge on to the downside. So that's the plan. But back to the to this, in order to go up, we need 8 swings. So we have yesterday. I was trying to see if we could make a move from here, but that doesn't. That's fine. So this is the low we have. So we can count this as a five-way move, as a 1, 2, 3, 4, and 5. It's going to be a little bit of a setback here in wave 2 now, because we're right there at the 5650, which is this 23.6. Okay, right from the high right there. This, I mean, are we just gonna, if this is all it is, um, because if you notice, market definitely has selling pressure. So if you look at this, see, they all look the same, right? But then the price definitely turns back down again every time. So let's just measure it. 2.55, 2.5, 2.31, 2.5, 2.54. See, they're all the same. And every single one of them, this one, this one, this one. Did I measure this one? No. And we are right here now. No, this looks small. So we have 1, 2, and 3. So what did the price did? This one end up making a lower low. This one did not, but it has a pretty deep retracement. Went all the way back to the lows pretty much, but it made another reversal back to the upside. So so this one did not, and this one did. So 1 and 2. So 2 times the price has failed after making a 2.5% move to the upside from the lows. This case did not. So if it happened twice, it has done here. So I have a finger crossed that this three-wave decline here is going to hold and it's going to make a move back up to match this side. I'm looking at it as a swing relationship, but I can just talking to you in like a in Elliott language, but it's just how I'm looking for. I'm hoping for, but we'll see what happens. So we just need to hold the low. That's the only thing. We need to stop making lower lows. That's when the bleeding stops. And then the price will eventually starting to recover back to the upside. Good thing we're out of the channel. Okay. So now where we have our upside. For first, we have this gap here and we have this gap here. It's gonna get filled at one point. Okay, so we're right there to this 2556.50 to the 23.6. From here, if we do back off a little bit, and then from here, what will be our next upside? 57.41. 57.41 against this low. That's the plan. How it's gonna go, when it's gonna go, and how long it's gonna go, I don't know that. Is the low is in? I don't know yet. The low will be in when the swing turns up. That's when you call a low is in. Right now, you cannot say the low is in unless if you have a swings are down and you have a price that is making more lower lows than the and the lower highs. So just to be from the closing prices of yesterday, that's 1.82% to 57.40. So that 57.40 will fill this gap, 57.39. Okay. So that's exactly what I can just leave it for now. I'll just leave the way it is and keep an eye on this 1555, basically this low. 5504 to this low to hold. And then the price can make a retracement here, like if we do 2 versus 1. Here's our retracement level. 5611, 5591, 5574, 5557. So whatever the retracement will come down here, that this zone right there must hold because we want to come all the way down here. And then from here, the seasonality part comes into a play and all the St. Patrick Day, oops, whatever the case is, and we can target this zone. It was, look, I was trying to make an attempt here the other day. I've been posting this, like, I've been showing you this thing pretty much every day, like 5 times a day. You, um, I'll, we'll see how it goes. So I don't, as I said, I give you two reasons that this cannot be counted as a 5 waves to the downside. Okay, it's just you cannot count. It's just this price just has too much overlap, and I only look at them as a 3-way move. A 3-way move is just it's not a trend. It's not a trend wave. It's not a trend. It's not a motive wave. You need 5, and plus you have this decline here is bigger than this one anyway. So you cannot make a 1-2-1-2 case at all. It's just not gonna work. So we just gotta have to see. We gotta take some baby steps and kind of see like how the price recovers, and um, and we just has to watch and see if we can manage to hold the low, and then we need 5 waves up. So there's some work to do. So we need this, then we need this, then we can actually really say like, okay, you know what? Yes, I can call it. This is the low. We need 8 swings. We need to complete 5 ways. Then we need to set back in 3 to make something as a 1-2 count to the upside. 5 waves doesn't do anything. So don't get too overexcited over that. But it doesn't mean that we cannot play the upside. So for now, the plan is that any retracement toward this zone to defend this low is to see if the price does manage to make a move higher. I would put up a price at 57.40 for now to the upside. Okay. That will target this first gap. That will target this 38.2, which is the retracement from the highs of 61.47 all-time high. Okay. So this is an S&P. Um, looking at here on a bigger time frame, I see this thing as some sort of a fourth wave is into a play that is going to take some time because fourth wave cannot be just like directional like this. Okay? No way. So if I go back, this is my zone for the daily time frame. This is when I say like we gotta turn around. This is a pretty clean chart. I mean, for now, the way it's shaping up. Here's your December, October low. Yeah, one, two, up in three, which is three versus one. We talked about it last week. Then within this green three, we have one, two, three, four, and five. Now, a lot of people are making a case or telling me that we could do an expanded flat. We can, meaning that to move this third here to count this as ABC, WXY, you know? But the only problem with this, okay, by moving this three here is to, meaning to put this three here and make this thing as this. And then put the fourth here and call it off in this zone. And then from here, we need this. I mean, if you do that, put this three here at this high, that's a really tough read to get a five-way move into this higher on a bigger degree, on a larger degree third wave. Because you take as a one here as your two, and then from here you can put a three here. The three here is shorter than one, right? You can make this case here as a fourth, which is fine. It didn't really retrace below this high. And then from here to here, that's a three-way move as well. You need five. It just doesn't fit. You either do the Elliott wave the right way, or you can just sit around and do your monkey business and make it believe like, yeah, this is it. This is not how it works. Elliott wave is a very well-defined principle which has been written since 1930s before any of us were even born. Okay? When you try to outsmart or trying to be cute and thinking like I can overcome by skipping or breaking the rule, you're that thing. What makes you think that's going to play out? If I'm going to try to break a rule here, the computer is going to scream at me right away. But and there you just trying to make it like, oh yeah, I can just make a case and throw it like it does not. It just doesn't fit right. Wave one and wave three and wave five is a motive wave. You need five waves, not three, five. Your only counter trend moves are two and four. That moves against the trend wave. How can you make, so if you have a four and two, which is a counter trend waves that moves against the trend wave, which is your motive wave, how can you make this thing as another counter trend move to the upside? Doesn't make sense. Well, how can you count this as a five? Does it look like a five? Where is, okay, if I make one here and two here, where's my, okay, this is third. Where's four and five? How else I'm gonna, if I'm gonna have this low to this high, how can we count this thing as a five? I can squeeze this one here, one, two, three, four, and five. Okay, fine. I can live with this. But this third is shorter than one anyways. That's the point, is that you try to force something that doesn't make any sense, but you're still gonna make it. And then I have two guys on the community chart, they're posting like, oh, here we can make a case like this. First of all, I don't need any help with Elliott wave. That's the one thing I can tell you up front. Okay. I don't need any wave count or anything that somebody's going to tell me that I have this wave count. I can make the same wave count in 5 different ways. I don't need nobody's help in Elliott wave. I don't need to see nobody's wave count either. You're not going to tell me how Elliott wave works. You just don't. One guy sitting making videos, or you think I cannot see it? Or you don't know, or you probably think I don't know how Elliott wave works. I don't even do it that much. I used to. This right there is the larger fourth degree. And I'm going to keep this thing into a fourth wave until I have this confirmation and a swing up. That's my answer. Okay, I need Gann to give me the green light for me to open up the upside in a wave count. That's the only answer that I have. If you have a one-dimensional approach to the market, or this is how you like to trade, this is not how I like to trade. Okay? How is this fourth is going to come down? I don't know that. Okay? What we have is our fibs, where we can find a potential bottom. Are we going to be playing a bounces? Yes. But I cannot open the case for this fifth wave until I have Gann swings, turns up. I want to see true statements instead of false to start looking here in the fifth. One I will see the weekly turned up. We will secure whatever the fourth is, and we'll just project the upside. That's not a problem. Now the point is that how long is this fourth is going to take? Well, I don't know that. Okay. So so this fourth right there has a relationship with which? Two. Okay. And the wave two was 9.21. Wave four, 10.37. So the 4 versus 2 time, the price relationship has met. That's what they call 4 versus 2. Distance travel here in 2, same distance travel in 4 is equal to 100%. It doesn't matter how it's going to come down. That is relevant. 100% relationship is called 4 versus 2 is at 5580. We met that. We put a low at 5500. Okay. Then the 23.6, which is 4 versus 3. Okay. It's a 5490. All right. So that's the first zone for this price to show an to hold this zone to see, and then we can get a potential bounce. Our major support was 5669. Why is that? It's just because this is where we have the 10% drawdown, the third one. So we have 3 before. 10 here, 10 here, 10 here, and this is the 10. This is the fourth one. Remember, we just looked at those weekly time frame? We're just looking at price from this October low of 2022. So we have 4. All 10, 10, 10. So now the thing is like, okay, is this 10 is gonna go like this? It can. Is it turning something like this? We don't know that. If that thing turns like this, we're gonna start a bear market. This is gonna stay down for a long time if that's the case. So one of very early stages that we either mess around, kind of go sideways for a while, and or we just chop around here in this fourth wave, and then after that we just make our way back to the upside. That's how I see it. A slow growth doesn't mean a market crash. Slow growth mean as a bit of it's going to take the price is going to take a pause because everybody's under the impression thinking the recession is going to come, our market is going to come down 50%. I will tell you this, by the time the recession will come, it will be fully baked into a market. Market is already 6 months ahead of us anyways. So you can sit and talk about your recessions all day long, but nobody knows when it's going to come and when it's going to hit. Yeah, I mean, this is a recession right there, what you're dealing right now. Your portfolios are down, accounts are down, it's considered a recession. I don't know what other big recession everybody is have their hopes on. Now, if I take this, okay, now 4 versus 200 was met, 23 point, I mean, it's just shy of a few points, which is fine. What is the next downside retracement? 38.2, which is at 51.20. Okay. So we're talking all the way down to this mark, which is this right there. This area right there is going to threaten the bear market. Because that time you will have a decline of 16.72% from the time. This is where, let's see, right here. So if I stop my cursor here, okay, where do you stop? Right here. That puts it right around like 49.15 mark. 49.15. So from peak to trough, from whatever the high is, down to 49.15 is this is where it starts the bear market. So by that time, this whole thing is going to have at least 8 swings from the very top, or whatever the case is. There is a downside risk at the same time. I mean, it has upside as well, just because that's how I see it. So now the question is that this is all a four that we just had right there, and we're just gonna rip right back up. Because if I go with a three-way move to the downside, and we're gonna take three-way move back to the upside, so that will be ABC that we just did here. So W, so basically what would this is why I want to keep this thing here on a smaller time frame, because I want to work on a smaller time frame, because then I'm going to fit the whole thing into a bigger time frame. Okay, so it will work, but it's going to work with time, not just day to day. God, so if this thing right there turns into, because this thing can be an ABC as well, keep that thing in mind. So that makes it W. So you have A, B, C as an A, because on these ones are flat. Okay, A, and then you have a B, and then you have a C to make a W right there, zigzag. So you have a 3, 3, and 5 for a flat to make a W. Then you have a connector X. That is going to be another ABC. Then from here, you take another A, then B, another C down to the downside for the Y. They're called a zigzag, not a flat. You have a flat connector X with a zigzag. So the whole thing works like this. A, oops, no. A, B, C for W, A, B, C connector X, A, B, and C for Y. This move right there is going to be a zigzag move, meaning that you get 5 here, 2 up, another 5 down in C to complete a Y. Then from here, you go back up. Okay, so this is for now, this is the initial three-way move. Now, if you're going to take this third wave and throw them right there, this very directional. And I mean, price-wise is fine. But if I will start throwing a time here, no, we're not even close. We got we got plenty of time to go. 4 versus 2. 100% time relationship, I mean, is close, but it hasn't really even met because this decline was so fast. So if we just go by the time, it shows March 23rd of this 100% relationship with this. We already did it. So it's all about the price and time. So the price already hit the mark, but not the time. So we still gotta chew a couple more days at least to complete by March 23rd is to it. Then we already met the price. Now we have to reach the time. So then a 100% relationship will meet both the price and time. It's either or first, So sometimes the price is always gonna come into a play faster than a time, anyways, because you're coming down in the elevator. So from there, if for me, if you would ask me like how I see things from here and what my plan is, what do I think? Well, this is what I think, that we're gonna have a bit of a chop, okay? before we're gonna go back up. It doesn't mean that we're not gonna have upside. I think we're gonna have a little bit more of a room to the downside to come. I can be wrong, but I'm just how I see it. The only reason why I'm saying this because because of the swings. Okay. So there's one thing that I will tell you is this that the WXY that you're looking at here, your Y is going to be much shorter in distance compared to your W anyways. So I will tell you that. If your initial decline here on a complex on a W is much bigger, your Y is going to be much shorter. It's like so you see right there, smaller A, bigger C. S&P 500 is always like this. One side is going to be either big or small. It's hardly ever going to give you a full. This is what I think. It's going to take time and all the policies and all the stuff that he's doing. Okay. Um, this is what I think. That it's going to take some time for this price to kind of take a breather after this run, and then from there, because we're right there at 3.1, sorry, 3 versus 1 anyways from this low. You just gotta have to set back here and choose some time here in a fourth wave, and then from there make a move back up in a fifth wave. This fifth wave right there is gonna be the extended wave because we have a diagonal here. Diagonal in one, you're always gonna have an extended fifth. Now, if I take this, go back to our daily time frame, see it matches. Not from here, but if I take the swing count, okay, it put me right here in a fourth swing as well. So the fifth swing right now to the upside has an upside of 59.78 as of yesterday. Okay, so the point is like if this thing goes in a fifth and then if it comes back down, take out this low, I mean, we're gonna have a problem. So it just I can sit and okay. So then um this is a very good box. You guys see this all the time, right? This is I guess some of the stuff that I show you guys are pretty high-end technicals. This is the um, grid lines. Um, this is a very good way to find support and resistance. Like this is the GAN called time box. Um, there's the reason why I picked this is because of the swing. You see the two swing low right there. So you take this low to this high, and I mean it has a bunch of you can set them up with two standard deviation. Then it has it has a lot more. The square divisions basically it does 2, 4, and 8. That's how I set it up. You can always change your settings. So you can bring more if you want, but I don't, I try to keep them at 2. Just 2 standard deviation move. And you can do these angles from all so corners. You see, this is the reverse angles, it's the forward ones. You just like can do grid lines. This is good. You can do this. I like my settings that I set it up. I can do this. Doesn't matter. It makes what my point was this. Somebody was asking about what might take another flush, this and that. I was like, I don't think so. If you take this low and this high, the center is this. Look where we put the low. Yeah, you don't break the center grid line, right away. That's the center mark of the entire box. So from point A to point B. So this is the point is like what you're trying to do. You're trying to find support, right? Where is the price can potentially stop? Where I can expect a bounce, and that's what these lines does. So it's the one way to look at where you can expect. Like all I have to do is just move this cursor, bring them right to the line right there. Then I can go far right. What does it show? 55.17, right? I can see the price right there on the right side on the scale. And the low was 55 was 9. No, what the low is 55, 55.04. So I had a very, so then I made a case here, was fighting this. It's like, okay, I kind of have a pretty good idea 55-ish kind of area should hold. This is why I have to look at 5 different things just to see what other strategy or what other way that where I could see the potential support that shows there on their end that I could look and see if I can make this thing fit with fibs here on the wave count. So you gotta work like multiple things, because we're trying to see like where we can find support, where we can buy something, where we can play the bounce. So we'll see how it goes. But for now, okay, I mean, taking this is all gonna be all here. This 57, whatever that I'm talking about, that mark, it's all here. So the next week plan to start off the week from Monday, we need to keep an eye on the low. Okay, this low must hold. Any retracement toward this zone, we're gonna swing another long and see if we can play the upside toward the 38.2% retracement toward target the first gap from this all-time high. So that is just the only plan that I have. This is almost what a little over to 1 standard deviation move. Okay, it's just to see because if with this low is good, if whatever the high is going to be, we get a setback here in some sort of a three down, and then from here is where we would just simply measure. Like if let's say if the price stops here to 55.91, if I put 3 versus 1, see 3 versus 1 will come right at 57.34, meaning that could just simply play a measured move minimum to the upside. So I don't know where the bottom is going to be here. So whatever is going to be when it's going to take out this high, I'll keep posting this on a chat room that you will see. I don't need to do anything here. Just leave the way it is. Um, this one, um, the diamonds. If you notice, I bought them the other day, and been waiting and watching, and this looks the same. We just went through SPX. Um, Here's one bear market low, two, same three. Now the third wave on this SPX, remember it went up to um 261.8. Okay. And this one managed to just move barely, like it went up above 161.8, stayed below the 200 mark, three versus one. And from here we taken a three-way move to the downside. Now here's the tricky part, that what I'm gonna do, and because I don't like to keep everything the same, but I can always move around things, right? So the people who are talking about making an expanded flat case, I can make it here, okay, on this one, because because this one doesn't have much upside compared to an S&P, right? Remember S&P went up to 261.8 fib extension. This one did not. Now, if I count this, this one fits really good. Okay. So keeping this third here and making it as a flat, okay, three down, three up, five down, right toward this 100% mark in 127. This one lines up here with this, anyways. This is four versus two, 408. And we have 23.6. So these two right there, okay, we just went through with the S&P as well. They're matches, right? Let me show you here. 23.6 and 100%. You see, this zone right there matches exactly the same zone, 23.6 and 100%. So the price is right there. Now, if we make the case of an expanded flat, and if this zone holds, and if we're just gradually starting to work our way back to the upside, that will be the fifth wave from here. That means it's just a three-wave correction pairs with this three-wave correction here. So this is one, two, three, four, and now we'll do for a fifth wave. Okay. Unless this fourth wave will go more sideways, then I gotta move this third here. I can do that as well. So this way, it will go like this. One, two, three, four, and five. So this third, I can put it here, take this as a W, as an X, as a Y. Then this will match the S&P 500 that I just showed you with the WXY. I will leave that one the way it is. I will see how this one plays out from here. You see, then this way you will have two same counts, but one will work a little bit different than the other. But this will give, because right now they match side by side, right? You can't, I mean, I like to keep things side by side identical same way, but you want to always have to think something different. What if one scenario plays out, then you have a much better chance that, you know what, yes, the other one is going to play out as well. You just have to see which side plays first. You know, you can't be just like stick with one thing and say like, okay, this is it. This is my way or the highway? Either I hit it, or either I miss it. So it's better to have alternate path that will lead you to the same destination, but you just having a different approach, like how, because I can move this thing here as well. If I do that, then it will be in it as you know, it's going to be exactly the same as an S&P. I can do that. It's not a problem. But at the same time, I don't want to do it. I want to keep them that way, like this. Keep the third here in, instead of here, what people are saying. So we went through this thing by putting a three here. It just doesn't work. Okay. It doesn't work. But then at the same time, we know our swings are down. They needs to go up. So if that turns up, we're going to make a case here. Okay. So anything that happen, but it's going to take time. So each week we're going to revise this thing. And then at the same time, we're going to track day to day, price action as well. So they're positive. I don't have any buy signals. I don't have any buy signals either because swings are down. I mean, I'm not, there's no buy signals going to trigger on when the price is making lower lows. So, I mean, just the common sense, right? So I don't have buy signals yet. All we're trying to do is trying to play the bounce. And I will try to make sure that the next trades that we do enter, if it moves quick, whatever, we got to get out. You know, I want to try to keep a little smaller duration time just to don't open up like wide targets and stuff. Just keep it small and just trade that way for now until we, because right now all I'm getting is the mean reversions. Mean reversions are like the beat up signals, like where the price might take a pause and might start to recover from here. That's the only thing. Those are not those are just the mean reversion signals, are not as a buy signal. Buy signals are triggers when price actually in the trend moving to the upside, making higher highs and higher lows. But that's just not the case right now, right? The market is definitely under pressure by being down 10% pretty quick, pretty fast. So it's just going to take time. I hope this is all. And if that's the case, if this zone holds, I mean, we need five up here, then another three down here, then we go up in a three, four, five, then I can project the upside, you know? So I can do all this. It's not just not a problem, right? There's no point for me to start a run and run five versus one and all the fifth wave to the upside when all the swings are saying like just slow your horses when you're going too fast. I need this to work in our favor for me to be fully start sizing up trades and stuff. That's the way I just wanna that's how I wanna look at them. Did you see look I mean we're puking like 4 or 5 straight weeks in a row. But I mean the thing is this now if IWM from here managed to move up toward this 213 mark, let's say, right? A lot up to like 210, 7, 8, 4, 5, 6, 7 points. That doesn't mean that the swings is up. It is not. Yeah, it's just gonna take time. Yeah, I mean, the scalping part is we're just gonna go to a smaller time frame. We're just not, 15-minute those if you're wanna see the thing is this spy trades are very, very difficult for me to post. Okay. They're very hard. Because first of all, these bids move so damn quick. I personally I trade S&P, but spies are just like the price would be sitting here at 554. I'm gonna grab like 559 calls or something. They're bidding at like what 3.5. By the time I'm gonna type and copy paste, it's like 392 or 395. I don't wanna get myself in with 7, 8 contracts at 5370 and get you in for like 390, 395. You know, The bid moves so crazy in the morning, especially the first hour. They're very hard. But the only thing that I could suggest to you is just to watch the levels. If you could potentially buy them at the level to play a pop, you can do that. Spread's a little different because it has enough time and we can pretty much get filled almost near at the price. It just I mean I could scalp any trade. I can be in and out quick, but it takes time to for me to like to first to see what option like what expiration I wanted to choose, what the delta shows, what the implied volatility what implied volatility looks like. Okay, I want to go out 1 week out on time. Okay, what the premiums looks like. How many contracts do I want to trade? So I want to scalp like what 2 points. Okay, if I don't get the 2 points, if I get end up holding the trade for overnight, what kind of a theta that I'm going to have against me for the next morning. You see, there's so many things that comes into a play. Gantt chart for Dow. Yeah, I mean, it's right here. Here, what? This is all. It's the same thing. Yeah, these are the 3 bar swings. There are 4 type of swings. Okay, 3 bar swing. This is what it is. 3 bars. You need 3 higher highs or 3 lower lows for swing to turn direction. Then we have volatility swings. Volatility swings are the ones that are based on those ATRs, average to range. Then we have the dollar sign swings, dollar swings, and then we have the percentage swings. Now, if we go back to the percentage swings, which I have up here, it's going to be the same thing. What are this thing? The percentage swings right there gives you the upside targets as well. So I can change those. Do this. Keep them as the same thing. I set them up with here. So if we do a percentage swing, that gives you the exact, oh, not exact, I would say like, but it will give you a pretty good targets. You can play those as well. See? So right now the upside target 577. What did I just tell told you? This one right there, 206 off the low. This one is at, oh, what? Right at that 418 right there. This one at 489. These are the percentage swing, and then once it gets there, and then it changes. So I do all of them. I've been, but I do with the 3 bar. Those are the ones that I like. There, some people like. There's not that many people do swing trading, anyways. I like 3 bars. They're the best ones. You can turn that. Some guys do 2 bars. You can turn it into. You see, now you have more swings. Now that changes swings after every 2 bars instead of 3. But the 3 is going to give you a much better read on a price compared to 2. It's like having signals on a smaller time frame compared to a bigger time frame. Smaller the time frame is, more signals going to fire. The bigger the time frame is, less signals are going to be fired, and you're going to stay in a trade for much longer, and you're going to have a much better reward, right? So the signal testing, the results, you can do a one swing as well. Signal testing usually happens on a bigger time frame. 1 hour and up. No signals has ever been tested or has an accuracy or result based on a 10 or 15 minute. That's just noise, you know? Because people just have their thing like just hit something today and just call the day and we're done. That this kind of a mindset it just doesn't click. I don't look things like this way. Things takes time. I mean, is I mean, going through a rough time or whatever, it's gonna be over. Nothing's gonna. It's not. Are you? I'm expecting the whole year is gonna stay this way. Um, but I was gonna. We just need this is a monthly. I'm going. That's the daily right there. This is the daily we just gotta have to watch from day to day basis. So let's keep an eye on these uh these colors. Let's see how many days we stay in green until we turn red. Okay. So we need 2 more days anyways, because all of our swings are down. So, and the only stock that has the higher swing is NVIDIA. Right there. See? NVIDIA. Remember I told you this, and NVIDIA put a outside reversal bar. This is what I was waiting to see if we can get this on some of the other stocks, but no, this is the only one it did it. This reversal bar is a lot of times going to put a bottom. You see how what happens right there? Boom. You see, swing turns up 16.3% from the lows. I cashed it. We cashed it out about 120. Yeah, 120. I think I can go up to 130. Very strong close yesterday as well for Nvidia. Very strong close for the week. See, all these swings are down. This is an S&P cash, not the the SPY. I have a SPY here, Sandy, but I track S&P. This is at a fourth swing right now, on the way up toward the fifth one. So we have semis here. Semi swing turned up as well. Oh wow, I didn't see this one yesterday. Semis are not gonna lie. Look at this. What the hell is my semi? Right there. Look at this rotation. Some of these semis are ready to go. Look at all these semis right there. QCOM. I was looking at QCOM yesterday. ASML, MU, or QCOM, AMD, TSM, and it has NVIDIA right there. Semis are ready for a relief bounce. Not these too big right now. They're weak. So service now right there need to work. You see, just fighting back and forth. See, red, green, red, green. So need another day or two for this. It was a good close yesterday. So we'll see because you see the 3 days right there. We need like a little consistent this green shaded area. We didn't had any. See, there's more red, green, red. You see what happens here? We need something like this, like this, like this. It's a pretty charts, huh? All these, all the colors and stuff. It's Tesla. So Tesla is the same thing. I'm just like watching these with those. It's in a sixth swing right now, and See, it has a higher bar, lower bar. Yesterday was a higher bar. So, I mean, it did manage to close above the five. So for now, just to be on the side, just 291 kind of area is the one we can look for to the upside for now. And that would be the seventh swing for this. But on a weekly time frame, it's going to be a third swing coming up to the upside. So look at this. Tesla didn't do anything last week. Took initial dip down here and just, you see, one, two, three, four. That's the whole week right there. One, two, Monday, Tuesday, Wednesday, Thursday, Friday. And just, it opened at what, 252? Yeah, 252.54. And it closed at 249.98. It was down like 2.5 points. Closed the week. Yeah, Nvidia is the only one because because this one right there, when I send you this, you can look right there. See the swing true? That's what will tell you if the swing is up or not. As soon as the swing is going to turn up, it's going to show you true. That's what the true false statement is. Okay. If the swing is up, it's a true statement. If the swing is down, it's a false statement. So it gives you the quadrant and stuff, but you always pay attention to these midpoints. Okay. It's just, I always try to target these 313. Apple is at 213.49. You see the midpoint is 212.08. That's where the mean reversion comes. Okay. From the top to the bottom, from the top to the mid, from the bottom to the mid. Um, Google 165, 176. Okay. These are a great calls that you could buy. Whatever that you're trying to buy the weakness, just try to focus on this particular call where the mid price is because they're out of the money price. Okay. Well, it depends what the price is. Look at Amazon 197, 197. I'm telling you, this is what the price gonna see. This is what I'm targeting. This pig right there from the Microsoft to get to this 422 mark. It will get there. I don't know. He's gonna. Oh boy.
Oh, what 2 minutes, Imran? Come on.
Okay. Um, I have to go because my little kid, he had a karate, whatever he plays those um, karate. He has a testing today for his blue belt. He has green now, so I gotta go. So I gotta go. Yeah, just focus. I mean, I send these screenshots anyway, so just focus on these prints. Okay. Amazon, Microsoft 422, Netflix 803, but now is at 918. I don't know what the low was. And this is 577, 607. See, they came pretty close. So just yeah, all by himself. So we could Tesla is at 313. So that's the plan is. Okay, I gotta go. This is gonna be it for the day. And then rest we can cover on the chat. Um, just There's Tesla that I'm trying to. I'll post. We have them all going side by side. So okay. All right. Enjoy the rest of the day. We'll talk to you later.
Thank you. Enjoy karate.
Okay. Thank you.
Bye.
Bye.
Maybe just an hour if you want.